Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar still continues to be somewhat negative as the technicals are still breaking down, and also from the post-US Federal Reserve minutes was somewhat hawkish after indicating a possible rate hike of 50 basis points in their next meeting. Nevertheless, I am getting a little bit careful in coming out with any bearish calls, as recently contesting this level of 74.5 did stage a rebound, and it may do again. Still, just keeping an eye on it, as a break would give further indication to the downside and look towards the region into the 73 area. The euro is attempting to at least restage some of its losses, or raise some of its losses, after the market broke 109.30 the previous day and now retesting this level. I feel there isn't enough momentum to generate a rally due to the ADX holding to a bear trend and still technically from the RSI and the MACD still negative. Therefore, any upward trek or any attempts to the upside should fail, and therefore may look back towards, I believe, the 107.50.80 area, and that the call remains at the moment. The dollar yen, well, you can see here this divergence is still showing a little bit here, but it's only weak. Nevertheless, I feel the market may actually potentially stage a downturn, and if so, look back towards 121.50 and reassess from there. Any advances should struggle beyond 124. Sterling still keeping its bullish pattern, I believe, while it's still intact at 130, figure 30 that is, and therefore look for a retracement up towards that 133 region and reassess. Sterling Kiwi still holding relatively firm since posting this weak bullish hammer, and also the last 2 days it's still looking relatively strong, and the MACD is still holding positive, and the RSI is now finally married up to that, and therefore could see a rise up to the 190 or even up to 192 and reassess. Although we've been coasting for some time with gold, the market is still contained by the level of 1,930, and then above there 1,945, as we saw a rejection just previously the other day, that is. With the technical still negative, I'm still calling down to 1,900 and even lower down to 1,800, around 68 to 72. Finishing up with oil, the market did take out the level around 97.70. We saw a test up there today and now backing away in light of the pattern and the break, and the technicals remaining heavy. Could see a move down towards this 92.93 region and reassess. Well, that wraps it for today. Thank you very much for joining me, and as always, keep an eye out for the intraday report. I hope you enjoy the rest of the day.